You would have often seen big Bollywood celebrities becoming background dancers on Ambani's wedding. Also, you would have noticed that some of the top celebrities' kids study at Dhirubhai Ambani International School, which now charges lakhs and lakhs of fees. On top of this, in the recently concluded IPL final, 3.2 crore ended up watching that final on Jio Cinemas, which is quickly becoming one of the top streaming platforms of the world. If we speak about another conglomerate, which is Adani-ji, you would notice that his wealth has exponentially grown over the last several years. There have been talks about by Ministry of Finance and Niti Aayog on some of the projects that have been given to this conglomerate. Now, before I delve deeper into the story of these two conglomerates, there is an important disclaimer. Hi everyone, welcome to today's video. So at the onset of the video, let me make it explicitly clear that both the Adani family and the Ambani family have done a lot for India. For example, they have built critical infrastructure. They have put Indian businesses on the world map. These are all positive steps that would make any Indian proud. But on the flip side, we also need to consider the fact that both these big business conglomerates are building their set of monopolies, and that will lead to a series of challenges. So just to set the context, let me show you two graphics first and foremost to indicate at what pace both these empires have grown and in which areas are they currently present. For example, if you consider the Reliance's business empire, you will see that they are present in terms of retail stores, they are present in terms of media houses, they are present in electronics, they are present in entertainment, they are present in terms of infrastructure development. And if I keep on listing the names of the company, then this video would go on to become like probably 1.5 hours. So I will move apart and I will speak briefly about the second graphic, which talks about the Adani Empire. So here you can see that Adani Empire is extensively present across infrastructure domains in India, be it solar, be it ports, be it airport development, be it highway or roads development, be it logistics, be it travel booking. And again, it will take me 1.5 hours just to go through the list of the businesses that are owned by both these empires. So this brings us to three critical questions. Number one, that is this duopoly or this monopolistic building that is happening at a pan-India level. Is this something to worry about? Number two, what kind of impact is it going to have precisely on you? Third and finally, is there something that you can do in order to prevent this situation? So these are three specific points or questions that I'm going to discuss on this video. This video has taken extensive amount of time to research. I will show you the pros and cons of this monopolistic / duopolistic business building model. You will understand the current landscape of capitalism in India. So that is the precise political neutral conversation that I would want to have. Just a simple like and support from your side would allow these type of videos reach out to more people. This is a fundamentally important topic that every Indian should know about. So let us kickstart our conversation and let me answer question number one, that is this monopoly building, and with these two corporate houses getting more and more strengthened with time, is that a good thing or a bad thing for India? So the short answer is I don't know. There are two variants to this story. One paints an optimistic picture, one paints a pessimistic picture. So let me help you understand both these stories from a slightly more economic lens. So the positive side of the story is that these companies are undertaking three critical goals. First and foremost is that they are projecting the Make in India story in a way, because both Adani and Ambani are homegrown businesses. Approximately 60-70% of their business comes from India. So this is a first critical point that you must understand, that both Adani and Ambani tag onto that nationalistic sentiment that, okay, these are homegrown brands and they are putting India on the world map. Second key point is that they act as a source of inspiration for future business builders, people who are trying to become entrepreneurs. So it sets a positive tone for business building in India. Third critical point is that one could argue that both Adani and Ambani are building critical products and services, be it Jio Telecom, be it the infrastructure that Adanis are building. One could argue that if these big conglomerates would not have put the capital behind these infrastructure projects and these big projects that are changing the way we interact with the entire world, then these products would not have come into existence in India. So these are three critical points that are put forth by people who believe in the Adani-Ambani story. Now comes the viewpoint of pessimists. So let me explain that by using a lot of economics and finance around. So the pessimists outline three critical points again. The first key point is that both these companies are in monopoly building. Consider the case study of Jio. It is almost becoming a monopolistic player in India. What would that lead to? Well, it will lead to a lot of killing of competition. It is very unlikely that any new big player is going to enter the telecom space in India from this point. So I will help you understand through a case study subsequently. The third key point is that if both these companies become too big to fail, then the argument could be made that these companies will become too big to care. Very recently, you would have observed the entire episode of the Adani stock meltdown. There were a lot of corporate governance issue. It is not clear that what has exactly gone wrong. SEBI is looking into it. Bunch of investigation report will come. Who is right, who is wrong? I'm not here to speculate. But to cut the long story short, what ended up happening in that fiasco was that a lot of people ended up losing their money. Retail investors who had invested in those stocks. Still, the corporate governance black clouds haven't gone away. During this entire time, you would have seen that a lot of public sector bank came in and they openly said that, you know what, we will continue to lend to Adanis. And these type of situations, if Adani's and Ambani's become the economy itself, then it could be a repeat of a 2008 financial type of crisis that originated in the US. So in 2008, when the financial meltdown happened in the US, there were a lot of banks that were bailed out by the government. Why was that the case? Because they became too big to fail. So the primary argument is that if these companies keep on building the monopolies, they will kill competition. And as they kill more competition, they will become too big to fail. And if they become too big to fail, they will stop caring about anything. So now comes the natural question that are monopolies always bad? Well, again, the answer is not that simple. So let me again show you two methods of building a monopoly. This will be a very quick discussion on business building and how some of the biggest companies in the world have actually gotten built. So there are two roadmaps to building monopolies. So very quick understanding of what a monopoly is. So basically, let's say that you're using phones, right? And almost if one player ended up owning 50% of the phone market, that one could argue that that is a monopolistic player in the market, because one big player has a substantial share of a particular big industry and rest of the other players are fragmented very small. So what is the problem with monopolies? Well, the primary problem with monopolies is that once they build a monopoly, they can charge you whatever amount for a critical service. Now, very quickly discussing the models of how monopolies are built, there are typically two methods. One is called as innovation-driven monopoly building. Here, I would urge you to take a look at this particular photograph, and what you would notice is that when it comes to the richest people in the world, be it Jeff Bezos, be it Elon Musk, be it Bill Gates, how have they exactly built their wealth? Well, one could argue that Elon Musk ended up building very innovative products. Similarly, Amazon revolutionized the e-commerce industry. Similarly, Bill Gates ended up doing what? He revolutionized the software industry, so to say. So all these monopolies, be it Microsoft, Tesla, Amazon, Google, all these have been innovation-driven businesses. The second way of building a monopoly would be capital-driven. Now, what is the meaning of capital-driven? So for this, let us quickly work through a case study of telecom industry in India. So this particular graphic here would show you the telecom market share of different players in the year 2013 versus the 2023 market, where the telecom sector or telecom industry currently stands. All of us would agree to the fact that telecom is a critical product. It is not as if that we can, or most of us can, stop using our phones. We need internet, we need like mobile phone internet connectivity, all that stuff. It's a critical industry. Now back in 2013, you could see that the market was fragmented. What is the meaning of fragmented market? It means कि बहुत सारे players हैं, 1, 2, 3, 4, 5, 6, 7, and no one had a dominant market share. It was not as if that one company was growing and growing and others were getting crushed. Now, what is the situation now? Well, you can clearly see that Jio has approximately 40% market share of the Indian telecom industry. Now, going forward and given the growth rate at which Jio is growing, one could argue that a few years down the line, or probably a couple of decades down the line, some of these players might wind up their shop. So what would end up happening? Well, the telecom industry would get monopolized. Now back to our model, and if we analyze this capital-driven model, it has three specific parts. Part one is that a company throws in a lot of capital to build its clout, build its market share in a particular important industry. Important point to be noted here, and again, going back to our case study of telecom, did Jio revolutionize telecom? The short answer is no. It's not as if that Jio ended up doing a lot of R&D the way Apple did, or the way the Microsoft did, or the way Amazon did. Well, they threw a lot of capital on a critical industry. I will talk about in a minute where this capital was procured. But step 2 is that once they threw a lot of capital, they ended up controlling a critical product the way Jio is controlled now. And third and finally, enough barrier to entry is built, because now if you are thinking that, you know what, I'll also build my telecom company and I will try to compete against something like Jio. You can't do it because capital itself becomes a very big barrier. Now you'll say that, you know what, capitalists operate in such a way that they want to corner as much profits as possible. I completely get it, but there are two specific problems with this argument. The first critical problem with this argument is that how this initial capital is procured. Now, capital का मतलब क्या होता है? It means that how are you earning or raising money for a particular venture. Now, please go and study the Adani story. Again, I will link one of my videos here. You can go and watch it. You will quickly realize that both these companies, be it Adani's, be it Reliance, their initial access to capital was via the public sector money, right? Public sector money. Because this initial capital is the capital of you and I that we have given them in a way. So this is problem one. Second key point is the nature of the product itself. Now you think about the telecom industry. What do you need to do in order to control the telecom space? Well, who owns the raw material around telecom? Well, it is the spectrum. Spectrum what hai? You might have heard 2G spectrum, 3G spectrum, 4G, 5G spectrum. Well, it is the channel through which radio waves move. Now, this is a national raw material. For example, all the coal that you see being extracted from India, who owns that resource? Well, India owns that resource. It is not someone's private resource. Similarly, when it comes to spectrum allocation or spectrum, who owns that? It is country's natural raw material or natural resource, so to say. When it comes to ports, well, it's the country. So again, going back to the model that when it comes to capital driven type of businesses, the initial capital is procured through public money. Secondly, the type of product that you're controlling, it is not innovation driven. Third and finally is that if we study the nature of the product, that is a national raw material, so to say, around which monopolies have been built. Now, is this right according to you? Is this wrong according to you? I hope that you understood the difference between Amazon building its monopolies versus the capital driven monopolies that are getting built. So now might come a natural question ki theek hai, right? I mean, they are building like capital driven monopolies, but mera kuch to fayda hai that I am able to use phones at a cheaper rate. So that is amazing. People are getting jobs. So that is amazing. So okay, so let us do a very quick analysis there also. And these are the numbers that I have pulled up. That Reliance Jio Q4 financial year 23 profits have gone up by 13% and they are net positive. So 4,716 crores of profit is they are sitting on, right? So that is there. And of course, they are going to become more profitable with time. But has Jio stopped raising the prices of the telecom plans that you are availing? The short answer is no. And let me show you some data and two data points here. So this data is from 16th June 2022. And here, if you go and check, there was a hike of 20% in the tariff plans. And let me show you data point 2 that this year it is expected, right, by the mid of the year in another 1 or 2 months, there is going to be another rate hike. This is something that all of you can vouch for the fact that jo telecom plans hote hain, prepaid, postpaid, their prices have been going up. So what would this do? That if the prices of telecom keeps on going up for the next few years, Jio is going to become more and more profitable. Again, I'm not trying to criticize the business. Had it been a completely tech-driven business built from private money, not leveraging national resources, then hey, fine, earn as much profits as you like. But that is clearly not the case. And I hope that by studying the previous section, you got the economics behind it. Now, let me address the second key point that people get a lot of employments. Okay, so let us pick the case study of Adani Empire. So right now, even after getting devalued and getting its valuation crushed, Adani Empire's total market cap right now is at $100 billion, roughly $100 billion. And the total number of people that they employ is roughly 23,000 employees. Now, let me show you and compare it to another business in India, which is called as TCS. So roughly speaking, TCS's valuation is roughly at $150 billion, 50% more. And guess the number of employees that they have. They have close to 5.5 lakh employees. If you run the computation market cap to employee, you will clearly see that given the size of Reliance or Adani, they are not generating as much employment as many are assuming them to be. Now you might have a natural response that okay, kuch nahi yaar, I mean at least entire India is getting rich. So okay, so let me address that point also. So all you have to do is that go on Adani Enterprises, look at investors here, and you will be able to see how much shareholding does the family owns. So you will categorically see that promoters in Adani Enterprise, because that is a good proxy for the Adani Group, almost 67% of the entire equity is held by the Adani Group. Do the same exercise for Reliance. Again, you will see majority is held by the family itself. Do the same exercise for Jeff Bezos. Guess and tell me in the comment box how much of Amazon does Jeff Bezos own, right? So the point that I'm trying to tell you is that, hey, if India grows rich by, let's say, 100 rupees because of Adani or Reliance, then how much of that wealth is actually going to India? Well, 40 rupees, rest 60 is going to the promoters itself. This is an important point that you need to understand. So with that said, and still, if you haven't pressed the like button, please press the like button, share it with your friends. It would allow more people to see realistic stories. Now, over to question number 2. So now comes the second question, that if this monopoly building game continues to run, then what impact is it going to have for you? So the first critical impact is that this is going to crush industries. You would have often heard these stories that Amazon has killed a lot of Kirana shops, right? The number of Kirana stores in India are going down. Now, with the building of localized monopoly, so to say, this trend is only going to accelerate. Similarly, if retail stores are entirely owned by these big players, then why would someone set up a small mom and pop type of a shop? So building small businesses will become increasingly hard. Second key impact on you would be that with increasing monopolies, the innovation will get curbed. This has happened in the US in the past, and I will give you 2 examples there. One was a company called as diapers.com. So diapers.com was a very interesting website. It only used to sell diapers. And suddenly one big multinational company figured out, yaar, hamara diapers business khatam ho raha hai. So what they ended up doing was that they bought the website and then they killed that website. So that is what they did, and that was the reason for buying diapers.com. Something similar happened with Dollar Shave Club. So I think it was Gillette that bought Dollar Shave Club at $1 billion valuation, and then it bought that website and killed it. What was the innovation of Dollar Shave Club? Well, the innovation was that Gillette used to sell very expensive razors. Dollar Shave Club came and said that, you know what, we are going to sell razors at $1 only. So what did Gillette do? Bought the company, killed that. So this is called as limiting the innovation. This frequently happens in the pharma space. Unfortunately, it will start happening more and more across industries. And what would be the end result of it? Well, the end result would be that normal customers would have to pay higher price for diapers, higher price for razors, higher price for telecom, higher price for using the airport, and more of such things. Now, third and final impact would be that with this creation of duopoly, there would be a handful of rich oligarchs that will live in India. What do I mean by that? So for that, let me show you. Here is a list of Russian billionaires. Just go and scroll through it. Look at how they became rich. And out of like 10-15 that you will see, almost all of them became rich by owning a part of Russia. Now something similar might happen if we move to a monopolistic / duopolistic business model, that there will be a handful of people who will become ultra elite and the nation will get rich, but that wealth will not transpire to that bottom 99% people out there. So then comes the final part, that is there something that you can do? Well, there are 3 things that I would recommend. That invest in Adani-Ambani group. No, I'm just kidding. But yes, you should definitely learn how to invest, but the philosophy, yaar, Adani-Ambani mein we'll invest and we'll definitely become rich. No, it will not work out because of the shareholding pattern that I told you about. You might not become rich, but definitely learning about stock markets, investing in it can definitely help you out. No doubt about that. Second key point, that please support small businesses. If you have a choice to take a holiday, try to support a small business. Stay in someone's Airbnb. That is much better than staying at some resort that is owned by a big enterprise, so to say. That way you are supporting a local person. Similarly, if you can go have a coffee at some restaurant that is locally family owned, please do that. If you have an option of going and buying stuff from a normal Kirana shop, please go do that. These are very small, simple steps. It might cause you a little bit of inconvenience, maybe. Please do that for your fellow Indians. Third and final point, learn to question. This is a dying art. Unfortunately, even the media empires are owned by big businesses, so they will never show you this type of data. So whatever data you are able to read, comprehend, please share it with your friends. Please share this video with your friend. Please like, comment, subscribe. All these things will help these type of videos reach out to more people. Unless you become critically aware, you cannot put pressure on policymakers, so to say. Please understand that there are advantages, disadvantages to this monopolistic building. I'm not trying to sway you in either of the directions. You make that call whether this is a problematic scenario or not, and accordingly form opinions. Thank you so much for watching, and I'll see you soon.